When I say the GOAT, the greatest of all time, who do you think about? Yes, we know Tom Brady is the GOAT, but that is in a whole different industry. On this page, we focus on finance, so I am talking about the Oracle of Omaha, which is Warren Buffett. Warren Buffett is internationally known as one of the greatest investors of all time. So I started to study him, read books about him. So whenever I do investment, I always use a lot of his philosophies. But for those of you who are new, I am Lando, your favorite motivational teacher. Whenever you come to my page, the goal is for you to leave knowing something that you didn't know before you came here. So some quick housekeeping, make sure you press that like button, press the subscribe button. That will help this video go out to the YouTube algorithm and be able to reach the masses. And also, if you're not signed up for WeBull, you can do it right now. Only signing up for $5, and that can get you up to 1 to 2 free stocks. So what I decided to do in this video is cover 3 great investment tips that I love from Warren Buffett. You have a lot of them, but in this video, we want to just talk about 3. The first one is investing in yourself. I'm going to let Warren Buffett talk, then I'm going to break it down.
By far the best investment you can make is in yourself. I mean, for example, communication skills. I tell the students that come that they're going to graduate schools and business, and they're learning all these complicated formulas and all that. If they just learn to communicate better, and both in writing and in person, they increase their value at least 50%. And, I mean, if you can't communicate, somebody says, it's like winking at a girl in the dark. Nothing happens, basically. And you have to be able to get forth your ideas, and that's relatively easy. I did it myself with the Dale Carnegie course. Some people wish I'd taken a shorter course now in terms of my talking later on. But it's just hugely important. And if you invest in yourself, nobody can take it away from you. The second thing, which I'll get a certain criticism for not living it, but I do tell those students, that if I gave you a car and it'd be the only car you get in the rest of your life, you take care of it like you can't believe. Any scratch, you'd fix that moment. You'd read the owner's manual. You keep a garage and do all these things. And you get exactly one mind and one body in this world. And you can't start taking care of it when you're 50. By that time, you'll have rusted out if you haven't done anything. So you should really make sure that you just remember that you just got one mind and body to get through life with and to do the most with it.
The first thing he talked about is effective communication. Work on your communication skills, because unfortunately in the time we live in now, it is a social media era. So you have a lot of people that are socially awkward because you usually communicate through Twitter, through a phone, through a computer versus being face to face. Whenever you want to handle real business deals, handle investment deals, you have to deal with people in person, and you want to know how to communicate with them. Even in relationships, you have to know how to communicate to the other person effectively. Now, back in the day, they had different courses. How Warren Buffett talked about the Dale Carnegie course. They don't really have that effective really right now, but in college, you do have certain type of courses where you can do communication skills, and they have a lot of books where you can read right now. How to Win Friends and Influence People is one of my favorite books because that helps you how to understand different people's language, and you can take the conversation on whatever side you kind of want to do it. Investing in yourself also means your skills. What type of skills do you have that you can invest in yourself that can't be taken away from you? As soon as I graduated, I got my CNA license, I got my auto tech certification, my heating and cooling certification. Then I started driving, got my chauffeur's license. Once you have a certain amount of skills, people can't take them from you, and you become more valuable into the marketplace. So you should always not just work at one job for 30 years and not increase your skills, because the more you increase your skills, the more money you possibly can make. Number 2 is interesting. Everybody don't want to hear this, but investing is not for everybody.
Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because your stock goes down, you shouldn't own a stock at all.
No, I mean, what are dumb things? Selling a stock because it goes down?
Selling a stock because it goes down. I mean, if you buy your house at $20,000 and somebody comes along the next day and says, I'll pay you 15, you don't sell it because the quote's 15. You look at the house or whatever it may be. But some people are not actually emotionally or psychologically fit to own stocks. But I think more of them would be if you get educated now on what you're really buying, which is part.
When you start getting into the investing industry, I know as a new investor, you're going to be emotional and you're going to want to do what everybody else is doing. But as you get seasoned, as you learn more, you don't want to make rational decisions. Warren Buffett made a great example talking about your house. If you Google your house right now, the value changes every single day. One day it could be 200,000, then the next day it could be 185. Imagine if you looked at it and you was like, oh my God, it went down 15,000. I lost 15,000. I need to sell it now. You don't think of that with your house because you really don't care. You really don't plan to look at it. You know it's going to go up probably in the long run. That's the same way with stocks and companies. You don't want to look at it every single day, and just because the company went down in a week, you're just going to throw the whole company out. So it's not for everybody. If you're one of those people that can't handle it, don't even get into this industry, but you want to invest in a good company, sit back and enjoy. And number 3, the last thing is invest in productive assets.
Well, the whole idea of investment is to lay out money to get more money back later on, right? And if you buy a farm or you buy an apartment house or you buy into a business, either one you own directly or one you own a piece of through stocks, you are buying into an asset that you expect to produce something later on. Now, if I buy a farm like I did 25 years ago in Nebraska, I bought a farm, 400 acres. I paid close to $700 an acre for it, and I looked to see how much it would get an estimate of how much corn it would produce per acre, how many soybeans, what I'd have to pay the tenant farmer, what the taxes would be, and I made an estimate of the income that I would receive from that farm. I didn't go out and get a quote on it, I didn't turn on the farm channel, every day to see whether it was raining or something and whether it was good for my farm. Instead, I looked at the farm itself as to what it would produce. That's what I do in terms of stocks. Now, there are other kinds of assets that don't produce anything, but you count on them becoming more attractive to people next year or the year after. You're looking to the price change rather than the output of the investment. That's a whole different game. I mean, if you buy, we'll say, art as an investment, and you pay $20 million for some painting, you don't look for the painting to produce anything. If you're looking at it as an investment, you just hope somebody else will like that painting even more a year from now or 2 years from now. You're betting on the price of the asset rather than the productivity of the asset. I like things where I look at the productivity of the asset. I've used this example before, but if you take all of the gold in the world that's ever been produced, it comes to about 165,000 metric tons. Some people get excited just talking about that sort of thing. But if you put that all together in a cube, you would have a cube that's about 67 feet on a side. So we can take something maybe about the length of this hall here and have a cube like that, and that would be all the gold in the world. That gold at present prices is selling for $7 trillion. So that cube is a $7 trillion asset. Now, all of the stock market in the United States, I don't know the exact figure now, might be 20 trillion. So would you rather have a third of all of the businesses that exist in the United States, or would you rather have that cube to look at? That cube, if you take all of the farmland in the United States, there's about 1 billion acres of farmland. That's a little over 1.5 million square miles, about half of the continental United States. If you take all of the farmland in the United States, that 1 billion acres, you add in 7 Exxon Mobils, and then leave yourself $1 trillion for kind of walking around incidentals, that would be the value of that cube. Now, would I rather have that cube, 67 feet on each side of gold, or would I rather have all the farmland in the United States plus 7 Exxon Mobils plus $1 trillion to stick in my pocket? I think that's kind of an easy decision. But people like gold. When they get afraid of money, terrified of money, they run to gold, and then they hope somebody will pay more for it next year, because it isn't going to produce anything. That cube is just going to sit there and stare at you, and you can go, if you own it, you can go and you can fondle it, and you can sit on top of it and do whatever makes you feel good, but it isn't going to deliver anything to you.
So what he basically just broke down is you have 2 ways you can invest. Let's say you have 300,000 right now. I just did that video talking about how much to invest in a tropical smoothie. If it's 300,000 to get you a tropical smoothie, right? Would you invest in that, or would you invest 300,000 in gold? That tropical smoothie can bring in customers every day, different type of revenue, because that investment is going to keep on making you money. Versus me investing in gold, I am just hoping that something goes up. Also, Warren Buffett do not like just sitting on cash. If you got cash just sitting there, the value of the dollar is going to go down over time. You kind of want to invest that money into some type of business that can make your money grow and let your money make money for you, if that kind of makes sense. So those are the 3 things I love from Warren Buffett. He have a lot more tips all over. I will probably do another follow-up video. Let me know in the comments what are some of your favorite Warren Buffett tips that you have used. Let me know if you learned something new that you didn't know before you came here. And once again, press that like and subscribe. And if you're not with WeBull, just press that link in the description and I will have more information in there for you. I'm Lando and I'm out.
Oh.